They told you to hold. They told you the number would never come back down. They laughed at the idea that something could fall that far, that fast, that hard. And now, right now, the market is doing exactly what patient people said it would do. While the noise was loud, while the hype was deafening, while influencers were painting pictures of $500 price tags and Lambo timelines, some of us were sitting quietly, watching, waiting, counting. This is not a story about a crash. This is a story about what happens when reality finally catches up to emotion. And if you've been paying attention, really paying attention, you already know what's coming next. Let's go back. About 7 months ago, when XRP was sitting comfortable around $2.20, a call was made. Not a popular one, not a viral one, a real one. The kind that cost you followers in the short term, but earns you something far more valuable: trust. The call was simple: take profits, step back. Something deeper is coming. And as XRP climbed higher, the message didn't change. It got louder. It's time to sell. It's going under $1. 8 months of people saying that would never happen. 8 months of comment sections and community posts calling it crazy. 8 months of the crowd being wrong. And now? Now XRP has touched $1.02. That's not a dip. That is a reckoning. There is a particular silence that settles over a market when people stop believing. It isn't dramatic. It doesn't announce itself. It creeps in slowly, like the tide pulling back before something big moves. Traders stop posting. The excitement fades. The energy drains out of the room. That silence has a name: capitulation. And XRP investors right now are capitulating at the fastest rate since the brutal 2022 crypto collapse. That's not an opinion. That's the data. The fourth largest cryptocurrency slid to $1.02 on Friday, its weakest level since February, dragged down by a market-wide sell-off that sent traders scrambling for the exits. There was a small bounce afterward, but bounces don't heal wounds like these. The rebound didn't settle anything. Because this isn't a dip anymore, this is a surrender. Here's what the actual numbers are saying in plain language with no spin. Glassnode, an on-chain analytics firm, tracks something called the profit-to-loss ratio. It measures whether the people moving their coins are locking in gains or eating losses. Right now, that ratio has collapsed to 0.33, the lowest reading since August 2022. Think about what that means. For every single dollar of profit being taken, holders are accepting roughly $3 in losses. 3 to 1 against them. When that ratio drops below 1, the people selling at a loss aren't the minority anymore. They're running the show. They're setting the tone. They're defining the market. And they are exhausted. That's what capitulation looks like from the inside. Not anger, not panic, just exhaustion. The quiet decision to stop fighting a price that keeps going lower. Now here's something nobody wants to talk about, but it matters. A lot of people out there last year, loudly, confidently, on camera, told their audiences that XRP was going to $500. $500. It never happened. It was never going to happen. But those same voices are still collecting views, still building audiences, still being trusted by people who don't know the difference between vision and performance. There is a difference between someone who talks about money and someone who actually has it. There is a difference between someone who started a channel during a bull run and someone who has invested through multiple cycles, through multiple crashes, through multiple recoveries. Some of those voices are being paid directly to pump projects to unsuspecting audiences. That truth is coming to light. More of it will surface. And the people who built their platforms on hype instead of honesty are going to have to answer for it. This channel has never taken $1 from a single project. Not one. That's not a flex. That's a standard. Back to the mechanics. Because understanding why this is happening protects you. When XRP slipped toward $1.70 last Wednesday, it triggered roughly $9 million in long liquidations, the worst single day for leveraged bulls since February 5th. Binance alone accounted for about half of those liquidations. And this wasn't isolated to one exchange, one country, one time zone. This happened everywhere, all at once. A liquidation isn't a choice, it's a chain reaction. Traders borrow money to bet on rising prices. They post collateral. When the price falls far enough, the exchange doesn't wait for them to decide what to do. It closes their position automatically and dumps those coins directly onto the market, which pushes the price lower, which triggers the next liquidation, which pushes it lower again. One domino, then another, then the cliff. Open interest, the total value of active bets still on the table, has fallen to roughly $25 million on Binance, a 3-month low, and around $185 million on Bybit. Across all tracked exchanges, it sits near $2.34 billion. But the number that should stop you cold is this. Futures trading volume has cratered to approximately $2.84 billion, down from more than $30 billion in the same stretch just 1 year ago. That's a drop of over 90%. The speculative frenzy that defined XRP in 2025 has simply evaporated. Even the math has turned against the bulls. XRP's 30-day Sharpe ratio, the measure of return relative to the volatility you have to endure to earn it, has fallen to negative 0.29. A negative Sharpe means investors absorbed every swing, every sleepless night, every heart-dropping red candle, and still came out with a loss for their trouble. Its longer-term Sharpe Z-score sits at approximately negative 1.57, performance well below historical norms. Translation: anyone looking at XRP right now and thinking about jumping in is staring at an asset that has paid nothing for surviving its wild mood swings. And until that changes, the shrinking open interest isn't a healthy reset. It looks more like the appetite leaving the room entirely. But here is where the story turns. Because honest reporting has to carry both sides. Capitulation is not purely destruction, it is also transformation. When exhausted sellers finally let go, those coins move from weak hands into stronger ones, from people who can absorb more pain into people who have been waiting patiently at lower levels. That transfer of ownership, that painful, ugly, necessary clearing, is precisely how bear markets eventually build their floors. The 2022 collapse looked hopeless right before it gave way to recovery. Every major bottom in crypto history has felt like the end before it became the beginning. The timing, though, that's the discipline. Capitulation can drag on for months when real demand refuses to step in. The data showing leverage flushing out is encouraging. Binance's perpetual futures to spot volume imbalance has settled near its monthly average, meaning positioning is no longer dangerously lopsided. The odds of another sudden liquidation cascade have come down, but that is not the same as buyers showing up. Spot demand, the kind of real sustained purchasing that actually holds a price, hasn't arrived yet, and that is why the plan hasn't changed. The target to start buying back XRP is under 80 cents. That is where the real accumulation begins. That is where patience becomes position. That is where the people who sold near the top and have been holding cash for 6+ months start building something meaningful at prices most people said were impossible. History doesn't announce itself. It doesn't send a notification. It doesn't ring a bell at the bottom. It doesn't tell you when the crowd is finally wrong enough that the opposite becomes true. But it leaves footprints in the data, in the ratios, in the silence of markets that have forgotten how to be excited. You are not watching a disaster. You are watching the necessary ground clearing before something new gets built. The people who understand that will be ready. The people who panicked won't. One decision, one level, one moment of clarity when everyone else is emotional. That's what separates the investors who come out of cycles with more than they started from the ones who started with hope and ended with lessons. If you're one of the people who sold near the highs and has been sitting on cash waiting, let the community know below. People need to see that this is what real investing looks like. Not chasing, not hoping, not holding through every collapse because someone on the internet told you not to look at the price. It's patience, research, and the courage to act when the moment actually arrives. If this kind of straightforward, cycle-tested perspective is something you value, hitting subscribe costs you nothing and keeps you in the conversation through every move this market makes. Not because you need to stay glued to a screen, but because when the moment comes, you'll want to have been part of the journey that saw it coming. Stay sharp, stay patient. The floor is being built right now, one painful trade at a time.